Hello and welcome to this week's Ferrari Financial US Market News Summary. Well, the Wall Street action this week was not a surprise to us. We've been predicting that this was going to happen for a couple of weeks now. Really, this was the top that we've been seeing forming, but has had a couple of postponements up to now before the market really did succumb to selling pressure this week. There was a massive drop really for all the indices the last 3 days of the week. The Nasdaq itself dropping more than 200 points. The continuing subprime woes, the tightening credit markets, the fact that the US housing market has really taken a hit over the last few months, really undermining consumer confidence, the rising oil price flirting and almost skirting with the $100 a barrel mark this week, have all mounted pressure on the bulls to throw in the towel, and the fact that the earnings reports this quarter haven't been encouraging. Certainly the indications going forward is that the fourth quarter is going to be quite weak, have finally meant that the market sold off drastically this week. Let's have a look at our Nasdaq Composite Index chart. Well, it's a bit of a different chart we're looking at this week. We feel that this is the week that the bull market ended. The bull market that's lasted over 5 years now has probably come to an end now for a short time, because the selling that's been prevalent in the last several months finally climaxed this week with a massive drop really. In the space of 3 days alone from here to where it seems to be settling over the weekend at just over 2,600. The Nasdaq dropped from its peak of 2,850 just over a week ago. That's a massive drop in a short time, on particularly high volume as well, which is very significant. But the most significant part of the fall was its broad-based nature, and in particular the fact that it was the large cap tech stocks that saw the largest drop. Financial sector has been weak for some time now, so a large percentage drop in that was pretty well expected. But the fact that it was the tech sector that really led the way down means that most people are feeling that really the market has gone as far as it's going to for the time being, in the light of the present US economic conditions, all the problems that seem to be mounting out there, and finally succumbed to selling pressure this week. Looking at the scenarios we have in place, we now feel that the two main scenarios to be looking at is the one that we mentioned a few weeks ago when this top was first being formed, and we drew a channel line. If I can just put that in again for you, the channel line about there representing that top, and then we looked at where there was considerable support for the market 3 or 4 months ago when we had a correction at that time, and this is the line really that was formed at that point, a support line down at just about the 2,500 level, just slightly below really. But if we go back, we see that this line extends way back as well to the beginning of the year, where there was a large support level here, and at the time it formed a barrier really for the market to go further up. There was a small correction before the market then took off in good style, which has really been the bull market of the last year, which we feel now has come to an end. The other scenario to look for really is the formation of a head and shoulders pattern, this being the left shoulder here, and this being the head forming, and of course the right shoulder should be forming out here in the next few months. This will then really give the impression that the market, even in the new year, is liable to take a further downturn to complete that head and shoulders pattern. If the channel lines simply form, The market may well just operate between these channel lines for the next few months, which will be a better scenario for the market, of course, if a longer term period of consolidation is the result of this sell-off and not the start of a much longer downturn pattern. Will the selling continue next week? We feel it will. We feel that there's a brief pause, hopefully at this 2,600 level. A little bit of consolidation, but then I do feel the market will continue to drop. And within the next week or two, there's a real possibility that the lower channel line that we've drawn will be tested, and that's way down at under 2,500, in fact, closer to really the 2,400 level that we predicted could be a temporary support for the market. A few months ago we said that the market could drop as low as that in the next few months, in the autumn in fact, and we may be proved right. We feel the market may need to drop as low as that before it receives some considerable buying interest again and can get a bounce back. If this retracement proves to be within the normal percentage parameters of about 60 to 70% before selling ensues again, then we are really looking more towards the head and shoulders scenario and the formation of that right shoulder, which of course is always the bearer of bad news, because if in fact that right shoulder completes in the normal way, it will really foretell a much longer downturn towards the end of the year and into the new year. We'll of course be watching the market closely again next week to see which scenario looks like the one that will unfold. Until then, it's goodbye from London.